Hello traders, and welcome back to my YouTube channel once more. So today I will be talking about market structure, specifically higher time frame market structure. All right, because as traders it is very important to understand the direction of the market before you even think of placing a buy or a sell. Okay, so today I'm going to be focusing on the higher time frame market structure. I'll be sharing insane content, so make sure you stick to the end of this video. And if you are not subscribed to this channel, kindly hit that subscribe button, turn on post notifications so that you don't miss other future important videos. So with that being said, let us jump straight onto the chart. Alright guys, so like I said, we will be talking about higher time frame market structure today. And the reason why I am bringing this to light is because understanding market structure helps you to know the direction of the market before you even think of pressing a buy or a sell button. Okay, so as traders, growing up in this industry, we had this common saying that goes like the trend is your friend. All right, so you always need to know the direction of the market before you even join the party, else you're gonna get lost. Okay, again, understanding market structure helps you to know at what point in time to start looking for trades. Okay, and if you guys are familiar with this, in the beginning of our trading journey, we are always in a hurry to like press the buy or sell button. You're always in a hurry to take trades. Sometimes it's just because you don't know what's going on. Okay, or you have a wrong idea or wrong information about what is going on in the market. But if you have a fair understanding of market structure, you will know that okay, at this point in time, I need to wait for price to get to this level before I can start looking for buys or looking for sells. Okay, and then also the last but not the least reason to understand market structure is also to help you know what kind of trades to take. Now I'm going to break this into two categories. The first category of this kind will be to help you know whether that trade you're going to take is going to be a swing trade or an intraday trade. All right, and then also understanding that will also help you to know whether that trade will be a counter trend or a pro trend trade. Okay, so let us also not forget that if you understand market structure, you're going to know where you should take profits and when you should be holding trades. All right, so it helps you to know your target levels as well. Okay, so I'm going to start with this pictorial drawing. The black line is going to be our daily time frame, and then the red line is going to represent our H4 time frame. Okay, so we are using a downtrend scenario in this case. So let's say you jump onto the market and you see price making a high, see price putting a high, a low, we have a lower high, and then we have a lower low. Okay, so apparently we can tell that price is what is bearish on the higher time frame. So let's say it's daily, it's bearish on the daily time frame. Okay, so we have our BOS to the downside. All right, now in this scenario, what will we be anticipating? Okay, normally as a smart trader or as a demand and supply trader, we can anticipate that as price has formed a new low, there is a higher possibility of price what retracing to supply zones up here. Then we can start looking for sales to the downside because daily is bearish. Okay, but do we just start buying? No. And what kind of trades can we look at if we are not meant to just start buying? And what kind of trades are we supposed to look at, or what kind of confirmations can we look at? Okay, so remember I said the red line is going to be our 4-hour time frame. Okay, so in scenarios like this, the kind of trades that you can be looking for, knowing very well that the H4 is also bearish, that is making lower highs and lower lows, okay, aligning with the daily time frame, we can look for what intraday buys, okay, on the H4 leg. Okay, so we are going to be focusing on the recent H4 leg, which is from here to here. Okay, and then when it gives you a reason to start looking for intraday buys, you are going to do exactly that. You are going to look for those buys. Sorry, you are going to look for those buys, okay, on confirmations alone to H4 supplies. Okay, now how do we know that the daily wants to begin a retracement? Okay, if the daily wants to begin a retracement, definitely it's going to see it from the H4. So we are going to have this H4 level over here, which is a protected liquidity or a major structural level broken. Then we can see that price is ready for that for that daily retracement into supply zones up there. Okay, apart from that, the only thing that you need to do is to capitalize on the retracement buys into H4 supplies, because price can get to this point and then still get respected and continue with the H4 swings until it wants to begin the higher time frame retracement. Okay, great. So again, like I said, if the H4 tells us that it wants to begin that retracement, okay, we can capitalize on the bias. Okay, we can capitalize on the bias anytime price does what? Retrace. Okay, if you have in-depth understanding of market structure, to let's say the lower time frames, you can be capitalizing on these sales as well. Okay, just knowing that you are trading H4 time frame to the upside. Okay, so apart from that, we are just waiting for price to get into supply zones up here. Now, the fact that the H4 also has gotten into this supply zone does not mean that we should start selling to the downside. No. Okay, we need to wait for the H4, or let's say lower time frames, to tell us that it wants to start that pro trend scenario. Okay, if you try selling over here, probably it will be a counter trade for the H1 structure. Until that H4 structure is broken, you are not safe in taking a pro trend sales from that point. Okay, you need to wait for that H4 structure to give you that confirmation that it wants to begin the pro trend scenario. Okay, great. So let us jump straight onto the chart and let me show you real life examples of what I'm talking about. So coming onto the chart, guys, what we can see over here, that we had our last day daily high low over here that was breached. Okay, so I have my daily swing leg from here to here. Okay, and then I will be expecting price to at least retrace to the top here. Okay, but we see the price did not get there, so I focused on my next daily swing leg, which is from here to here. Okay, now knowing that that is my daily leg, I'm just going to mark my supply zone because I'm going to expect price to retrace up there. Okay, but just from the daily, we can see that price did not get in there. But could we have gotten any buy opportunities to the upside? Yes, of course. So let me just switch to the 4-hour time frame. Let me show you the opportunities that we could have had. Okay, great. So on the 4-hour time frame, what do we see? Okay, we can see a fractal nature of price here. Okay, even though it was on the daily leg, it was one push. Okay, but we can see the fractal nature over here, where the 4-hour was making a high over here, a lower high, sorry, a low, and then we had a lower high, and then we had price putting a low, and then another lower high, a lower low, a lower high, and then we had our last lower low here over. We had our last lower low over here on the 4-hour time frame. Okay, so from here we can see that the price 4-hour was making what, lower highs and lower lows. Okay, so 4-hour was also bearish within the daily bearish leg. Okay, so we could have taken advantage of all of these trades. Okay, we could have taken these sells, you could have taken these buys to the upside as well, you could have taken these counter trend buys also to the upside as well, bearing in mind that this time around you are capitalizing on moves on 4-hour time frame. Okay, so the last lower high over here that created a lower low, You could have also capitalized on the sales, okay, to at least minimum this H4 point over here. Then where price has formed what, a lower low, and then it tells you that it wants to begin a retracement, then you can start capitalizing also on counter trend trades, but then having it in the back of your mind that you are trading H4 counter trend trades. Okay, I personally remember I had buys from here and then also from here. Okay, if I get a screenshot, I'm going to display it on the left side of the screen, until we had this H4 breaching. Okay, so personally I remember that after this H4 breach, I was looking for price to come back into the zone, then I can look for buys into the supply. Okay, but because I'm not the one who controls price, you can see price just what smashed through. Then I know that at this point in time, 4 hour is what aligning with daily. So if I should get any opportunity, okay, after a retracement, if I should get any opportunity like in this scenario over here, which I didn't get because it didn't meet any of my criteria, then I would have what, swing it down to at least these daily levels over here. Okay, so let us go back onto the daily time frame and look at the next swing leg and the opportunities that we could have gotten from that. Okay, so let me clear this first. Now our next swing leg on the daily will be from here to here. Okay, so what opportunities did we have? So first of all, I'm gonna mark my supply zone over here. Okay, and we can see that with this one, price tapped into that supply zone. So let's head onto the 4-hour time frame and see what price did over here. Okay, so in here we could see cleanly that 4-hour changed intent over here. Okay, 4-hour was telling us that it wants to start a bullish retracement over here. So we had our 4-hour push to the upside. Okay, we didn't get price retracing deeper after this first push. We didn't get price to retrace deeper. Okay, then we had our next push to the upside, breaking this 4-hour high. Okay, then with this we had our retracement, okay, into demand zones, so we could have capitalized on the buy. But bearing in mind that we are trading a daily retracement leg, probably what I would advise is that, mostly people take these counter trend trades, and then because they are looking forward to show off their high risk to rewards, they tend to swing, their position straight into supply. I'm not saying it's wrong, it's not wrong, but I will advise that if you take trades over here, knowing very well that you are on the counter side of the market, probably you should take it to a high or something, or probably you take majority of your volume out at a specific target, like a reasonable target. Then you can just allow the rest to run. Okay, but you shouldn't leave full volume, okay, to just float into some zones that you're looking at, else you are going to suffer major damages. Okay, just like this example, I remember I was having some positions left in over here, looking forward to it that price will tap into this, but we can see price didn't get into that supply zone. So imagine that I had not taken enough volume off. It would have come back to take me out on the break even. Okay, and it would have been very, very painful. So when you are on the counter side of the higher time frame, try as much as possible to be taking a profit at very, very relevant zones, like for our highs or lows. So in this case, you're going to take your majority of your volume over here. We had this push, we didn't get that deep retracement. We are going to take, at least if you had the opportunity to buy over here, which I wouldn't advise because price didn't retrace so much deeper. So let's switch with that. We have this move over here, price retraced. We can get a buy over here, at least to this high over here. You can see that we are having multiple entry scenarios. So imagine that you had a buy from here, and then just from this point to this point, you are making, let's say, a 10-hour reasonably. You are cool, and then you wouldn't have to even panic. You have another next entry over here, and then you just make another 10-hour. That is 20%. That's 20 hour. okay, you wouldn't need to worry about if price will retrace or whatsoever, because you've taken very good profit out of the market. Okay, great. So when price got into this daily supply zone, what did we see? Okay, like I said, the fact that the H4 is making higher highs and higher lows does not mean that price is going to fly forever. Okay, so when price got into this supply zone, probably you could have had an opportunity to take a sell over here, but bearing in mind that these sells that you are taking are going to be counter trend sells in line with what H4, okay, until this H4 is broken like it did over here. Okay, so when we had any sell opportunity over here, it will be a counter trend against this H4 what push. Then after this H4 has broken, okay, we just had our retracement, okay, where we can now look for sells into what pro trend targets. Okay, so in this scenario, we had our H4 breaking structure. So we have our H4 aligning with the daily time frame. We have our daily bearish, we have our H4 bearish, we have price retracing. Okay, probably not into deeper levels, but if you understand demand and supply or smart money style of trading, you understand why price came into this level over here. Okay, then probably you can enjoy that move to the downside. And then when we have price retrace again, okay, and then probably the 15 minutes of the 1 hour, the 30 minutes confirms that it also wants to go bearish. Then when we enter sales over here, we have the confidence to hold these sales to at least what, these daily lows over here, because now all the higher time frames or all the time frames are aligning. Okay, so when we are taking trades over here, we have the confidence to hold to at least this level. Okay, now let us move again back into the daily and see the next swing leg. So our next swing leg was from here to here. Okay, so it means that we have an opportunity to capitalize on what counter trend opportunities to then sell back. We can see that from this scenario, price just reversed around here. Okay, it didn't retrace deeper. Okay, it's just because of this. If you look at price right here, you can see that we had these equal lows over here. That's liquidity. Okay, liquidity to the downside. So we had these equal lows over here, and we had price what, sweep these equal lows. So this becomes a very important candle to look at. So we're looking at price to at least, me personally, I was looking at price to come to these zones, and then we can take the buys to the upside, because I also had some sort of relatively equal highs over here. So I knew that price is always attracted to liquidity. So I was personally looking for buys from this zone, okay, to the upside. But like I said, okay, the fact that price has come into a demand and supply zone does not mean that you should start buying or selling. Okay, so if you look at the 4-hour time frame from this zone, you realize that the 4-hour didn't give us any intention to buy. Okay, so this was the last 4-hour lower high that made a lower low. Okay, so it didn't give us any intention to start buying. So I did not even start looking for buys, because the 4-hour didn't say so. Okay, you see that when it got into this demand zone, it continued with the sell, and that is how come break of structures happen. Okay, great. So back to the daily time frame, and we are focusing on this level over here. Okay, so I've explained to you why price didn't retrace deeper. Okay, great. So on this level, so within this level, do we have any opportunity to take these counter trends and to capitalize on the sales as well? Of course we do. Let us check and see what price was doing. Okay, so we can see just from the 4-hour perspective, we saw price making what, lower highs and lower lows all over this point. Okay, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Okay, so this became the last point of H4 structure that price breached. Okay, so this became the last H4 high that created a low, and we can see when price reached this level, price did not retrace so much deeper into the levels that we wanted. Okay, but again, if you understand higher time frame structure, when you go to the lower time frames, you'll be able to also what find a reason to take a trade, in these scenarios. Okay, so I can't remember I had some sales over here just to capitalize on that H4 retracement. Okay, but I had in mind that I'm looking at the H4 time frame right now, so I was just trading according to the H4. Then we had price again on the H4 still, bearing in mind that the daily is still bearish, but then we are capitalizing on moves on H4. Okay, so again we have H4 making what lower high, sorry, a higher high and a higher low. Over here we had price coming into these levels, then we can take what opportunities, or we can take buying opportunities in this zone. So even if, let me go lower, let me go into that 30-minute time frame to show you guys. I don't want to go so much lower into lower time frames because today is not for lower time frames, but just to show you the opportunities that these levels do, the opportunities that higher understanding market structure provides you. We can see that, okay, when price came into this level, okay, what did we see? We saw price making lower highs, lower lows. So this was a retracement. Okay, lower highs, lower lows. Okay, we had price break this level with some sort of a wick. Okay, whether it is one pip break or whatsoever, I mean, you just need to consider it. So we see price making what, that break of structure with that wick over here. So if I should just put that crosshair on it, you can see that the wick went above this high. Okay, so after that, it doesn't mean that we should just start looking for buys as well. Okay, what do we see? If I should take this level over here out, okay, the fact that we have had this level break, okay, does not mean that we should start looking for buys over here. Okay, you need to pay attention to market structure. What do we see over here? We can see price make what, equal lows over here. And what did I say about equal lows? They are liquidity. They are liquidity pools. Okay, so definitely price, not always, but most of the times, especially in scenarios like this, you know, smart money traders will be induced, especially those who don't wait for confirmations, will be induced to take the buys to the upside. Okay, and then what happens is that after taking the buys, they get smashed with that. Okay, then after that, the real moves come. So after taking this liquidity, we can see price gives us a reason now to buy. Okay, so now when you are buying over here, even from the 30 minutes time frame, you're gonna have a fair deal. Okay, at least, like I said, because you know you are trading daily counter trend, at least two H4 highs over here. Okay, so when you are in that buy, when you enter that buy, at least you should take it to that H4 high over here, and that is good. Okay, and what do we see? We realize that after that H4 push, we just had an H4 breakout structure. So at this point in time, we know that H4 is aligning with daily. Okay, we just know that H4 is aligning with daily. So knowing that the H4 is aligning with the daily, we know that this is our recent H4 bearish swing leg. So what would we'll be looking for? We'll be looking for price to push to the upside, okay, to push to premium zones that we can sell, okay, to push to premium zones that we can sell. But then price did not get into premium zones, and then we had another what, H4 breakout structure over here. Okay, so this becomes our new H4 leg. Okay, so what do? We wait for price to come into H4 levels. Let me go back to my H4 time frame. We wait for price to come to H4 levels like it did. Okay, like it did. You can see price to come to our H4 levels. Then we can start looking for what, sells to the downside. Now, let us not forget that after price getting into these levels, we know that the daily is bearish and the H4 is also bearish. Okay, so we have these two higher time frames aligning. Okay, so we can be taking those sells, knowing very well that we will be swinging it to the downside until H4 tells us that what it wants to switch. Okay, but you don't have to be greedy. At least, I mean, you just take something out of the market and then you just let it flow. Okay, there will always be opportunities. Okay, so you don't have to be greedy to be holding higher what. Probably if you want to hold higher risk to reward trades, you could just leave a small percentage on it. Okay, so what do we see? We see H4 making what? Lower highs and lower lows. Okay, before it switched over here. Okay, so this was where H4 switched. I remember this was a recent price action. So this whole leg over here, let me switch to the daily to show you guys something here. I remember this whole price action, and then people were just marking levels as daily and for hour. I mean, it's not problem, it's just how they understand market structure. But to me, this becomes my daily swing leg. Okay, so I have daily lower high, lower low, and my new daily swing leg becomes from here to here. Okay, so personally, I was looking at these levels over here to take my sales to the downside. Okay, but what happened within this range? You can see it was some sort of consolidating price action. Okay, but we can still get some pretty good trades in there. I remember I was having this 1:50, 1:90 risk to reward just within these ranges. Okay, just because I understand whatever is going on in here. So in here on our 4-hour time frame, we just had our last 4-hour lower high what breached. Okay, so I just knew that 4-hour was bullish. Okay, so whatever price is doing within this, I just have it at the back of my mind that H4 is bullish. And so if I'm taking any buys, I'm taking it in line with H4. If I'm taking any sells, I'm taking it because it is a counter trend to the H4. Okay, whatever you see price making over here, this lower highs, lower lows, and all these choppy stuffs over here, they are just lower time frame structure level. Okay, so if you understand how market structure is applied in lower time frames, if you understand market structure on lower time frames, you can capitalize on all of these positions over here. Okay, so after this H4, do I just go and sleep? No, I can start looking for trades. I remember I had a sell over here from the 1 hour and then the 15 minutes, knowing very well that I'm trading a retracement leg of the H4. Okay, then when the 1 hour switched to bullish over here, I just knew that my 1 hour right now is aligning with my my H4. And so when I'm taking buys over here, I'm going to take it to at least my H4 high. Okay, now I know that I am taking buys to my H4 high at least. Okay, so I remember these buys that I took over here. I think that's my okay, I didn't make a video on that. That was on GBP USD. So if I have a screenshot, I'm going to put it on the left side of the screen. So I was taking the buys from here to at least H4 highs, which I had most of my volume taken out, and then allowing the rest to run. Then after that, I know that okay, H4 has been breached over here. Okay, I know that H4 has been breached over here, and so my next H4 swing leg that I'm looking at will be from here to here. Okay, so it means that I have the opportunity to capitalize on what counter trend trades to the downside. But as we can see, price did not retrace that deeper. Okay, we just had price retrace to a certain level in here, and then we can start also looking for trades, because after that we know that 4-hour is bullish, H1 is also bullish, and then the 15-minute also switched bullish in these areas. Okay, so when I'm taking buys here on the 15-minute time frame, I just have it at the back of my mind that I'm not going to get out of the market in this point. Okay, I know that once all these time frames are aligning, at least minimum I should be getting out at H4 highs over here. Okay, and I remember taking trades as well from these points. Okay, and then in this scenario also we can see that price did not retrace deeper into what daily supply zones. It just reversed around uh, um, higher and premium zones, and it just fell. Okay, so having that in mind, I just knew that my recent H4 swing leg also is here. So if I have this swing leg, the next thing that I could do is to be capitalizing on trades, okay, until price gets into this demand zone of the H4. Okay, and like I was saying, the fact that price has gotten into demand zones does not mean that you should start buying. No, you need to wait for price to tell you what it's supposed to do. So I remember, I think it's my third video or so, I was showing you a trade that I took from here. Okay, knowing very well that I'm in H4 demand zones, I still went ahead to take the sales. Okay, because price had not told me that it wants to begin the pro trend. Even though H4 was bullish, price hadn't told me that it wants to begin the pro trend buys. Okay, so I just took the sales, and that was what led to a break of structure of the 4-hour time frame, and then it continued until now that we have a break of structure of the 4-hour right here, and then another push to the upside. I don't consider this a break of structure. I just see it as a liquidity sweep over here for this week. Okay, so probably if price wants to retrace deeper, probably it can retrace to this point and then continue downwards, or it could just continue just like it is doing right here. Okay, so guys, this is where I'm going to end today's lesson. You always need to understand the direction of markets to know what kinds of trades you will take. Okay, so if this video helped you, kindly hit that like button, kindly share, and don't forget to leave a comment in the comment section. Okay, so see you in the next video.